Hey everyone, if you're prepping for competitive exams, you know just how vital it is to stay on top of what India's market regulators are doing. Well, today we're doing a deep dive into the latest enforcement report from SEBI. We're going to break down all the key actions, the crucial data, and exactly what you need to remember. Let's jump right in.
So first things first, let's just think about the big picture. The Indian market has exploded with new retail investors. We're talking over 10 crore new faces. That makes this question right here absolutely critical. How on earth does SEBI, our market watchdog, keep things fair and safe for everyone? The answer? Well, it's in their latest actions.
At its heart, SEBI's mission is all about one thing: market integrity. You can think of it as a three-part plan: constant vigilance, really thorough supervision, and, when needed, swift enforcement. And believe me, with millions of new folks jumping into the market, that mission has never been more important.
So how does SEBI actually do it? Well, the first tool in their toolkit is surveillance. This is their proactive, all-seeing eye on the market. It's constantly scanning, looking for any hint of manipulation, misconduct, or anything else that just doesn't look right. It's the first line of defense.
Now I know what you're thinking. Remembering all these different surveillance measures for an exam can be a real headache. So to make it easier, we've come up with a little something for you. A mnemonic. Just think of the word radius, like the expanding circle of SEBI's watchfulness.
Let's break down radius real quick. R is for rationalization of who counts as a connected person. This is all about plugging loopholes for insider trading. A is for the expansion of additional surveillance measures. D is for displaying more alert messages to you, the investor. I is for incentives, or rather disincentives, to make sure the market infrastructure is playing by the rules. U is for a super important update to UPSI, or Unpublished Price Sensitive Information. And finally, S is for extending surveillance to PSU and SME stocks.
Okay, let's pause on that term, UPSI, because this is a huge one for your exams. Unpublished Price Sensitive Information is basically any piece of non-public info that could seriously move a stock's price once it gets out. This concept, it's the absolute core of every single insider trading rule.
And this year, SEBI has made some big changes here. They've broadened the scope of what counts as UPSI and aligned it with other rules to make things clearer. The goal is pretty simple: get rid of the gray areas and stop anyone from getting an unfair advantage. It's all about leveling the playing field.
Now this chart, this tells a really interesting story about where SEBI is putting its focus. See that? The number of mainboard stocks under extra surveillance barely budged, but look at the SME segment, a massive 56.3% jump. This is a huge signal that SEBI is watching this space much more closely. Okay, so from surveillance, let's move on to the next tool in SEBI's arsenal. After the alarms go off during surveillance, SEBI starts its inspections. This means they're literally going on-site, doing audits, and checking in on market intermediaries, brokers, advisors, to make sure they're following all the rules.
So in the 2024-25 period, get this, SEBI conducted 207 inspections of investment advisors, and that wasn't all they were busy with. They also carried out 149 inspections of research analysts. Now, these numbers might not seem that crazy on their own, but wait till you see how they stack up against the year before. This is where the real story is.
Wow, just look at that. For both investment advisors and research analysts, the number of inspections jumped by nearly 10 times, a 10x increase in a single year. That's a massive surge and a clear signal from the regulator, a data point you absolutely want to remember for your exams.
And that brings us to the final stage, the sharp end of the stick: investigation and enforcement. When surveillance and inspections find something wrong, this is where SEBI steps in to take decisive action and uphold the law.
So, what's keeping SEBI's investigation department so busy? This chart makes it crystal clear. A staggering 72%, almost 3/4 of all new investigations were about insider trading. That tells you what the single biggest threat to the market's integrity is right now. Market manipulation wasn't far behind, at 26%.
And of course, breaking the rules has some pretty steep financial consequences. In this period, SEBI slapped on total penalties of over 813 crore rupees. That's a huge number, and it's meant to be a serious deterrent.
But hold on, this brings up a really important question. I mean, imposing a penalty is one thing, but how much of that cash is actually being recovered? This is a key detail for a deeper analysis, so let's look at the numbers.
And this table gives us the answer. The amount covered under certificates, that's the total bill, including interest and other costs, stands at over 1,800 crores, Out of that, about 504 cores were actually recovered during the year. Understanding that difference is crucial to getting the full picture.
Now, it's not just about money. SEBI has what we can call an enforcement ladder. In 2024-25, 560 entities faced directions, which are administrative actions, kind of like being put in the penalty box. But for the really serious stuff, 69 entities faced criminal prosecution filings. That's a whole different level of trouble.
All right, let's bring it all home. We're going to consolidate everything into the key takeaways for your exam revision. This is the stuff you absolutely need to know. So let's quickly run through the essential concepts and the must-remember numbers. Pay close attention here.
First up, the key concepts. Remember the UPSI definition got a major update to align with the LODR regulations. For surveillance measures, just remember our mnemonic, radius. A lot of the violations came from breaking the PFUTP regulations. That's the rules against fraudulent practices. And the two groups that were really in the spotlight were investment advisors and research analysts. Now for the numbers. Burn these into your memory. The nearly 10x increase in inspections for IAs and RAs. The 400 total investigations, with 287 of those for insider trading. The 56.3% jump in SME surveillance. The total penalty amount, 813.83 crore rupees. And finally, 560 entities faced directions, while 69 faced prosecution. These are your core facts.
So that's the snapshot of SEBI's year. But it leaves us with one last big question to think about. With technology like AI and high-frequency trading changing the game, and with more and more everyday people investing, what's the next big challenge? What's the next frontier for our market watchdog?
We've got a bunch of other explainers on related topics right here on our channel, so definitely check those out. And hey, if you found this one useful for your prep, do us a huge favor. Hit that like button, share it with your friends, and subscribe for more. Thanks for watching.